what everybody's talking about.
Recession fears are rising.
The spread between the 2-year and the 10-year bond officially
inverted for the first time since 2019.
A sign that a recession could be on the horizon.
It's predicted every recession.
Recession. The yield curve has been kind of an overhang.
Inverted yield curve. Yikes. Inverted yield curves can often, but not always, predict a recession.
The inverted yield curve is a topic that has garnered a lot of attention in recent times, particularly among those interested in the stock market. An inverted yield curve is a phenomenon that occurs when long-term treasury bonds have lower yields than short-term bonds. This has long been considered an indicator of an impending recession, as well as a stock market crash.
Of the yield curve. We're seeing more and more of it invert.
The yield curve now inverted.
Let's look at kind of textbook curves. Let's look at inverted first. An inverted yield curve is going to have a complexion like that. Basically, this is going to be your maturities from 3 months out to 30-year, full inversion. These are yields. So, of course, as you go down into the maturity range to longer term, yields go down. They don't always have to be like that. They can have curves. They can have little kinks in them. Now, if we want to know what a normal curve is like, it's exactly the opposite. So as you go through time, 1 year, 3 year, 5 year, 7 year, 10 year, the maturities, you see the yields go up. So if you had a 30-year, that was around 3%. You could have a 2-year, that was at 2%, normal slope. It doesn't have to be exactly like that. Sometimes it could be curved.
While an inverted yield curve is certainly a cause for concern, it is important to note that it is not a guarantee of a stock market crash. In fact, there have been instances in the past where the yield curve inverted and a recession did not follow. Conversely, there have been times when the yield curve remained normal and a recession still occurred. It is important to remember that the stock market is influenced by a wide range of factors, not just the yield curve. Some of these include economic indicators such as gross domestic product, GDP, growth, inflation, and unemployment, as well as geopolitical events, natural disasters, and technological advancements.
I think you have to look back at history. Yes, the inverted yield curve is a scary prospect, but before you sell everything, I mean, go back. The yield curve inverted what, early 2006?
Yes, so the last time we initially got the 3-month yield above the 10-year, it was January of 2006. And by the way, people did get nervous about it. It wasn't as if it was ignored. I think there's more attention on it now, but people did get nervous about it. In fact, one of the things to be aware of is when people start to explain it away and say, actually, it's different this time, we probably don't have to worry about it at all, that might be the time to worry, because in 06 and 07, people said, well, there's a global savings glut, there's all these technical reasons why the long yields are staying low, and that was maybe a sign that we did kind of ignored the signal.
Despite the uncertainty surrounding an inverted yield curve, it is still a crucial factor to consider when investing in the stock market. Those who are concerned about the potential for a stock market crash may want to consider adjusting their investment strategy accordingly, such as increasing their allocation to safer, more conservative assets. In conclusion, while an inverted yield curve is certainly a cause for concern, it is not a guarantee of a stock market crash. It is important to consider this factor along with a range of other variables when making investment decisions. As always, it is wise to consult with a financial advisor before making any major investment moves. Thanks for watching. If you're looking for a reliable and user-friendly platform for trading and investing, I highly recommend Interactive Brokers. Click the link in the description to sign up now and start your journey in the financial market. Remember, as an affiliate, I may earn a commission if you decide to use Interactive Brokers through my link. Thank you for your support.